What's good, chat? So today I'm just going to backtest the whole week. I want to backtest the whole week and see like where we could have improved, what trades I missed, and things of that nature. So pretty much I'm gonna backtest April 6th all the way to April 10th. A lot of people don't like backtesting. I like backtesting. It's like taking your test, then going back and looking at the answers and seeing like where you could have improved at. So this is what I'm gonna do. Then, like I said, I'm a journal, but I'm gonna just do it live with y'all just to show y'all how I backtest and how I be looking at stuff. All right, so this is Monday 04:45. So I'm just gonna show y'all how I would look at the markets. Okay. 5:15. Let's say we usually coming around like. All right, let's say I'll probably be on here about 6:30. All right, this is what I'm looking at right here, bro. So if I come in at let's just do like 7 o'clock just to make it more realistic. Whoops, sorry y'all. Okay. All right, so if I'm coming into the market, this is what I'm looking at, right? I'm gonna see we had this high right here. Okay, we touched into that, right? And we also have this up here, right here, right? This is what I'm looking. Oh shit, I'm on the 15-minute chart. I'm sorry, my bad, y'all. I wouldn't be looking at this chart. I'd be looking at the hour chart. My bad. All right, boom. Obviously, we have this right here, this body, and we made a higher high than that. So I would want to see. I think we took this on Monday, but I don't remember. All right, boom. We came below here, right? We're below this level. So now what I want to see is this is at 8 o'clock. I want to see us. My bad. I want to see us coming back this level, and I'd probably target these bodies that go right here. Now, a lot of people, I'm gonna make a video on this, but a lot of people ask me, Trey, should I target the bodies or the wicks? And this is what I'm gonna tell you. Understand this: the bodies will always get tapped into. The wicks may not, because you have to understand this. If say we came here, then came to right here, then came right here. What would that mean? That means price is probably still what? Bullish. This means it wants to go up. But once you go here and then here, now here, then here, you've broken that wick. Now that you've broken that wick, that gives me confirmation that price would what? Want to go down. Okay? So on this trade Monday, let me see. So this is 7 o'clock. This is 9 o'clock. Let's see what price is doing. This is 8:55. If I see a break, okay, no break. I'm seeing a rejection. Interesting. All right, so I see a rejection. So now I'm looking. Okay, I have this 15-minute fair value gap up here with that rejection, but we also have a 5-minute down here. That did it get disrespected? Yes, it did get disrespected. Okay, so let's see. Let's see what's going on. All right, let's keep looking. Okay. All right, y'all see how we broke down? I ain't gonna lie. This is probably something that we're not taking today. If I'm looking on a higher chart, we made a new low. So let's look at this right here. I'm marking this out though, but now I just want to see what's going on. So Monday, oh, okay. So 7, and this is outside of our session, so we wouldn't even take this. So Monday is no trades. I'm not taking no trades on Monday, but we have this zone marked out. So Monday would have been a day where you sat on your hands, right? You would have sat on your hands on Monday. No trades, no nothing. I probably wouldn't take nothing until we go above one of these lines. That's what I'm taking. All right, let's see what happens. Let's see what happens in the afternoon session. Oh shoot, my bad, yeah. I'm being overzealous. Y'all already saw what happened now, but all right. So Tuesday, I think we did take this on Tuesday too. All right, so remember Monday. This is what we marked out, right? Marked this out on Monday. And let me go. I'm not doing layman terms for you. I forgot. I totally forgot I was on a call with y'all. Let me go layman terms. Okay. So boom, Monday we got this marked out. This right here. This right here. And see, the thing is, when you mark your charts out, you don't really gotta delete too much if you know what's going on, right? Now I'm peeping this. Now I do peep that we made right here that we made a low, but I'm also looking in the night session and I'm saying, okay, we came down here, but we're not really respecting down here. Okay, cool. So now I want to see what price really does, and if we come back above here. But I'm really looking for up here because I'm seeing in the night session it came down here, but it's not doing shit with it. So obviously it's rejecting off of. So it must not want to go down. So boom, I'm coming to the session. This is 5 o'clock. So let's go. Let's do 6 o'clock. What time is this? 6. Oh, I'm sorry, it's the replay. All right. So boom. So I come into the market on what time is this? 6:45. We looking. We already have our things marked out. So boom, we sit in our hands until we see what? We see either a break above here, or I need to see if I'm getting to this down here. Because this is so many points, I'd probably want to see a break between that, and I aim for that. That's 772 points. So I'll risk not getting a sniper entry right here, then I want to see us break all this down here if we was to go that low. But we're gonna see what the market does. Okay. So boom, market opens up. Well, remember, if we go above here, If we go above here, we aiming for these bodies or this high up here. Okay? Because why? Where's the eclipse? All the time I use this, y'all think I know everything is. All right, so we aiming for this because this is our, remember, Monday. This is what we created. Is this higher than this? Yes. This is higher than this? Yes. So therefore, if we go above here, this is your indication. We go above here, we aiming for these highs. Bodies are highs. Remember what I said earlier. Bodies if you want to be safe. Highs if you just know. You know what I'm saying? So all right, let's get to it. All right, so boom. Time is this, 7 o'clock, 7:15. We on the 5 minute. I just want to see what's going on. And we creating this structure to the upside. This is beautiful. So like, I think we actually took this trade until we hit on this day. I think we made like 200 on this day. Boom. All right, let's go back because we would have been into this trade by now. But whatever. Let's just say we get into it right here. Oh yeah, because this trade, I think I made a video on this trade. This trade hit automatically. So let's say we buy, because we would have bought down here. So like we would have bought as soon as we crossed this line. But nah, let's yeah, we would have bought as soon as we crossed this line. So let's like buy like right here. Because like I said in replay, you can't really, you know what I'm saying? You can't really show like what it actually crosses because it'd be too high. So boom, you get in right here, and then your stop loss. When it crosses, I ain't gonna lie, my stop loss would probably be like right down. If we in this area right here, my stop loss would be right here. Boom, boom, take profit. So boom, Tuesday that trade would have hit. I think I actually made a breakdown there. I think we took that trade. This is like, it's literally perfect ICC, bro. Perfect ICC. Boom, you have this right here, have your correction down, come back up, break above that line, boom, back to the tops. You literally hit the tops, and we start rejecting down. Another thing I want y'all to realize, bro, is like once you hit these tops, bro, understand that's where price like starts to change. So the market has to correct a little bit, right? So don't be greedy. Take your profits, man. Take your profits in. Because look, if you went and took your profits, bro, you might have went and got stopped out. But let's see what happens. So boom, then market is kind of like, oh shit, look at that, good money. So boom, look what happens. Like you would have probably got stopped out right here. Market came back, collected when it needed to collect, and then boom, that shit went stupid. But like if you can't whatchamacallit, if you can't stomach this the correction again, or if you can't stomach it going all the way down here, don't, bro. Get out. Take your little 200, 300 for the day and get out. Yeah, okay, but you're Doug. I missed this move right here. Who cares, brother? You gotta be happy with what you got on me. All right, but let's get back to it. So right here, this is the new. So so like I said, we'd be done for the day. But what I would mark out is, let's get rid of all this right here. Let's get rid of all this. We're gonna move this up here because this would be our new indication. I don't really need this right here no more, so we're gonna move this right here. I just want to take note that that's right there, okay? Because this is higher than this. Well, this is higher than this, so like that would be our new indication. Shit, even this right here. This right here would be another one too. But let's see what happens though. Let's see if there's anything else we take. So it's 1900. Let's go to where we trade. Why don't you trade at night? Because it's the volume, bro. I don't really like the way the volume moves at night. I ain't gonna lie to y'all, bro. Oh, this is that Trump candle. That's what happened. Was that at that Trump candle? I don't know. I'm marking this right here for sure. I'll come into the markets. That's because this is interesting. Okay, 1, 2, 3, 4, 5. All right, 5. All right, boom. Let's go back. All right, so I'm coming into the markets and that's what I'm seeing. All right, I'm seeing we had a big move up. I'm seeing we have this right here. We also have this right here. So I'm looking at all this. I'm looking at all this right here, right? So I'd want to see us either come back above here. We probably aim for up here, and then I want to see us come below here, and we aim above all that. Kind of already did it right here, creating that new high. But we just want to see how the market reacts. So 15-minute, 6:45. Okay, rejection off to the 5-minute. So right here, 7:35. Let's see. So it's two. So right here at 7:35 is two things that let's talk about that, because some people probably would have took this. Who knows? I might have taken this, bro. Because this is the strat, right? And we probably would have aimed for like right here, these. But I want to show y'all something. But this right here, that's not really. That's your draw on liquidity right there. And I'm so like that's not really a good trade. in my opinion. It's not enough for it to even make sense. You know what I'm saying? And then, like I said, then it stopped at this fair value gap right here. But if I remember correctly, I think it does hit right here. So you might have got stopped out right here, right? You might have got stopped out right here. But I want to show y'all something though. Remember how I was talking about those bodies earlier? Remember what I said, okay? So sometimes the market will do it'll always come to the bodies. See this wick? See this wick right here and how it comes to this body, but it doesn't take the top? Why? Because if it takes the top, it shows that it wants to keep going. So if you really want to start like if you really like want to have low risk and like make sure that your shit always hitting, and as soon as you cross this line, you could really just aim for the bodies. Are you gonna catch the whole move? No. But if you just aim for the bodies, let's say you aim for the bodies right here at this like time frame. Let's see what happens. Because you have to understand, this is why wicks and bodies are so important. And people be like wicks, bodies. Um, the wicks, the wicks tell the whole story. So yeah, this is where the market closed at. So that's why it'll take right here and then boom back down, right? It'll take the bodies on the 1 hour. You would mark it on the so it'll take the bodies on the 1 hour and then boom back down, right? But like I said, if it takes the wicks, that tells a whole different story. That means we probably want to either keep going up or keep going down. Like it depends on which wick it's taking. You see what I'm saying? Like so, let's see. Let's see right here, real quick. Let's see what it does right here. Because you also see right here, right? So look right here. So we took these bodies right here, but we didn't take this wick. So that kind of tells me. So if I'm looking at this and I'm in the market right now, I'm thinking, and I'm telling you everything I be thinking because I really don't remember what happened in the market like this day. I'm thinking right now, okay, we didn't go below this. We in this no trade zone, right? We creating structure. I would think if we go back above this line, we want to go higher, and then like I said, I'd probably aim for the top. But let's see if my confluence is correct. All right, so like I said, I want a closure on the 5 minute for sure. Now I definitely want a closure on the 5 minute for sure because like this up here. Let's see if we get that. All right, that's a closure on the 5 minute, right? Closure on the 5 minute. I get into that up here. And the reason why I would target these wicks up here, because we already did this. So this was to stop people out, right? And if I'm putting my stop loss for a 134, where's the 15 minute? Let's see. Fair value gap right here. That's too far. That's really what I wanted at. But honestly, I'd go low risk so I could get into something else if need be. Let's see. What hit first? Did we win? So we would have lost off that. So that's bad. That's bad. That's bad. You know what I'm saying? Did it hit up here? Did it smack up there? So we would have lost off that. So like off that we would have, but that's because I have bad TP. I would have to see where to put my TP at. So let's go back to it. See, this is why we do this shit, bro. Where's it at? Where do we put that 5 minute at? So putting your 5 minute right there wouldn't have been smart, right? Your shit right, putting your joint right there is not a smart move. But let's see if we would have went. Where was it? The first closure at? It was right here. All right, so it would have been smarter. And these are all the things we looking at, bro. Cause it hit, like we hit, but we would need to put TP probably. Let's go back into it. We would need to put TP probably like right here, 96 to make about 131, 260. What's that? That's a 1 to 3. That's cool. That's fine. That's okay, in my opinion. Now let's see if that would have hit. Did that one get stopped out first too? So that one would have lost. All right, cool. So now I'm looking at this and I'm thinking, okay. I'm looking at this, bro, and I'm thinking now, okay, like, where should we put the TP at? Right? Where does the TP make sense? Or does this trade make sense to take it off? Boom, you right here. Because honestly, the first thing I'm looking at is, because if I look at this correctly, this is what happened, right? And then you have to also go back and look at this shit too, right? The smartest place to put your PT would be under this 15-minute fair value gap. Why? Because this is one of those trades. I think I made a video on this trade too. This is one of those trades where I'm looking at like, okay, why am I getting stopped out? But it's obviously we want to go higher, right? Look, we build a structure to the upside. It's a fair value gap right here. See, this is why I backtest. This is why I backtest, because imagine if I'm in the market and I'm doing this. You know what I'm saying? If I'm in the market and I'm doing this, it's like, damn, I just lost this. I just lost this bread. I just lost this. I just lost that. But it's like, okay, you have to figure out where does it make sense for the market to be at, right? So boom, you have this fair value gap right here, right? And then boom, watch what happens. Look where we tap into. So the smartest place to put your thing would be right here. But that's 303 though. So really, if for you to make sense for you to even take that trade, you would have to get at least 1 to 3, 1 to 2, maybe. So you'd have to put. So that now you're looking at this and it's like, oh, does that make sense? So no, it doesn't make sense. It doesn't make sense to take this trade off of this ICC off of when it hits the line, right? It doesn't make sense to take the trade when it hits the line. But when would it make sense? It would make sense to take it off this stuff. If you got that 15-minute right there, right? You got that 15-minute right there. Cool. You got that 15-minute right there, right? And you seeing. So you got that 15-minute right there, and now you seeing that price. Here, let's go in a lower time frame so you can see. So you got this 15-minute right here, right? All right. You got this 15-minute right here. Okay, 15-minute fair value gap right here. You see that price is coming into it, right? Now it would make sense to go in a lower time frame and look. When do we start rejecting off that 15-minute? All right. I see this. A little bit of closure outside. Now, aggressive trade would be, okay, you have this 15-minute confluence. Now off this, now this is better. All right, boom. 130 to make 312. I'm going to get in right here. Excuse me, I'm sorry. I'm going to get in right here. One con, TP up here to the tops. Stop loss right here. That's a 1 of 5. Now let's see. Boom. That's a 1 of 5. And that hits. So this is one of the reasons why we backtest for the week. Because now we look back, okay, where. So it's like, and it's okay to lose on backtesting. That's the point of backtesting. It's like you're not in the real markets. You seeing why you lost. You're going to grab your journal. I'm going to use the Bible as an example. I mean, the Bible is just as good as Bible better than a journal. But imagine this is my journal. You're going to grab your journal, and then you're going to write in it and talk about, okay, boom, this is what I saw. So if I go back, so say I lost this day, right? Say I lost this day. Right? Because this is actually a good trade. Because like I said, we use ICC plus fair value gaps, right? Sometimes you just can't use. Sometimes like when you go, sometimes a lot of y'all are telling me like, oh, but trade when it goes above the line, sometimes I just get stopped out. Like right here, you would have got stopped out. Like right here, you would have got stopped out. Right here, you would have got stopped out. So let's use an extra confluence, the fair value gap, 15-minute fair value gap. Is there a 5-minute fair value gap down here too? No, just 15-minute. All right, 15-minute. Like I said, 15-minute, 5-minute. 15 minutes is way better than 5 minutes, but both can concise. There 3 minutes? Nah. Right here. Kind of, but 15 minutes is more. See what I'm saying? Anyways, okay. So you just got to figure out why the market's doing what it's doing, okay? So boom, we got our joint we aiming for up here, right? We keep coming up above. Boom, we create this 15-minute fair value gap. It's something you have to do in the market. You have to be proactive and looking what's going on. You have to be proactive and looking of what's going on. So if we come above right here, and I saw this too, because remember when I was like, this 15-minute fair, we just had a 15-minute fair value gap, and really you want to put stops right here. That was the first thing. If you go back in the video, that's the first thing I said on this trade on this day, when we were marking our stop loss. It was like 388. It wouldn't have made. I think it was like 388, so it wouldn't have made sense. So also you have to look at it like this. It was like, okay, cool. Boom. We've already came above. Would I rather wait? And mind you, so it's this right here. It's 230, 333. Doesn't make sense. You also have to think this too. Would I be okay waiting for the price to come back to this fair value gap, rebalance, and then get in? That's something you have to think too. But then also you have to understand this. When you're in the markets and you're trading live, you're thinking about making money. You have to also think about this too. Would I be okay if price just ran to my TP right now? So these are the things you have to think about in the back test because it's super different when you're in the market. Right now you got time to think about it and be like, no, I'd be okay with it touching it. But in the market, it's like if you see that run up without you, you'll be like, damn, I could have made a cool little $230 or $130 and damn, now I can, you know what I'm saying? So you got to think about these things too when you, this is what backtesting is for, is to think about your psychology, think about your emotions, think about everything that you have going on. But anyways, when we see this right here, 15 minute. So say it's like 3 minutes left. We're gonna mark this right here, right? Cool. Literally the next candle though. If literally the next candle, because where you open? You open right here. So literally, I think the next candle did it though. So like if you would have gotten right here, the next candle like would have stopped you out. But the next candle kind of did it. So but what was I talking about? My fault. I'm sorry. I'm yapping. But anyways, so we're gonna go. You got you. What I was trying to say is you have to be able to call when fair value gaps are being created before they actually form. So if you see this right here and see nothing is tapped into it yet, you'd be like, okay, this is creating a 15-minute fair value gap right here. Do I want to get in right here with the chance that maybe we would rebalance right here? These are the things you just have to think about before you get into a trade, right? So now, so maybe you might be like, okay, you know what? Instead of taking this right here, because literally these next two candles did it. So maybe you'd be like, okay, instead of taking this right here, instead of buying right here up here when we're already kind of above, I'm just going to wait. And if it takes up here, whatever. Like it's a day where I'll catch more points. I'm just going to sit on my hands. And then you wait and you see, okay. Oh, fair value gap tapped into. Understand this. Trust yourself as a trader. When you have something marked up on your chart and it does it, get into it. I don't care if you lose it. Trust yourself because your body will tell you. If you've been training for a long time, your body remembers patterns. Your body will tell you what the hell's going on, what the hell's not going on. You know what I'm saying? So if you say 15-minute fair value gap, I see we already tried to come above, we couldn't. We have another fair value gap, but we take because it's a lot of liquidity rushing up here. It's a lot of people who got into shorts up here. So a lot of because it's a lot of liquidity rushing up here, right? So look what happened too, right? Boom, we take this liquidity up here, we pull back a little bit, and then we come up a little bit, and now right here in this area, it's liquidity, right? It's money sitting up here. People right here were in shorts, right? Let's go back. Let's go back. This video is way longer than I expected. We only on Wednesday. So boom, boom, it's a lot of money sitting up here, right? It's people in shorts right here. They're probably aiming for right here. Remember what I said about the wicks. Right? We break wicks when we want to make when we want to go lower. That's why sometimes the market will hit the bodies, but it won't hit the wicks. Because right here, that means we're changing the state of the market. If we go back down below here, it's a lot of big money getting stopped out right here. That's why because it's a lot of liquidity sitting right here too. It's big money in buys right here because they know we finna do what we finna do. It's big money in buys right here. So boom, we come down. So we get up here, we go above this line. Boom, it's got out all the ICC traders because all ICC traders are in buys right here, right? I mean, all the whatchamacallit? All the ICC traders are probably in buys right here, right? Boom. So boom, and then it's hella people shorting right here, right? So boom, it's buy and sell liquidity up here. So boom, we come down below here. It's hella buy liquidity right here. It's hella buy liquidity right here, right? Hella buy liquidity right here. Hella buy liquidity right here, right? Big market, buy liquidity, buy liquidity. So if we go down here and we take out that buy liquidity, that's gonna make me look at the market like, oh, we trying to go down. But watch, look, see how we're building structure? We don't break this liquidity. We don't break this liquidity. We up, right? We up. Okay. My market's right here. This is liquidity. Boom. We take this liquidity, right? We take this liquidity. So everybody who was in shorts down here just got stopped out, right? Boom. Everybody who was in shorts down here just got stopped out, right? And this makes you wonder, why do we move so fast? And I'm just like dropping gems. Why do we move so fast to go up there, to take that liquidity up there? Why do we move so fast to take this liquidity up here? Because we need that money. And because we move so fast to take that money up there, we created this fair value gap. So we just moved hella. We just pushed hella, the big money just pushed hella money into the market. So now we need to rebalance and fill the gaps that because we moved so much money, now we need to rebalance and fill some gaps. So we have enough money to keep going to the top like it did. So watch what happens. Boom, we take this and watch immediately what happens after. The next candle. We drop. Rebalance. Rebalance into what? The 15-minute. But now that we've rebalanced, we grabbed that front and said, hey, can you help us break through this wall so we can boom up top? Now it's money bags, baby. Now it's money bags. Now you can do this. Now you could keep moving up. You ain't never gonna come back here. You could keep moving up. You could keep going to the tops. You could keep breaking highs. Why? Because you just got all the shorts out right here. Then so you just got all the shorts out right here. So you took all their money. And then you rebalanced. So now the market is in good structure. You rebalance in the market, and boom, now you're able to boom up. So this is why we back test, bro. So could we have lost this day? Yeah, we might have. We might have lost this day. We might have lost this day. But this is why you have to add other confluences like fair value gaps, other things to your nature. Okay. All right. So let's go to the next day, bro. Let's see what's going on. I hope I'm dropping gems on this for you too. I hope I'm not confusing y'all. Because I was really just going to do this by myself. Because I usually just back. But I was like, I might as well let y'all see how I back test. All right. This Wednesday. No, so we would, like I said, I wouldn't be taking no more trades this day. I'm not gonna lie, because like we probably lost and a hell of other shit. So let's see. 23. Whoops. My bad. All right. Let's go to right here. 7 and 6. All right. So it's 6 o'clock right here. So I'm looking at I'm looking at this right here. Damn. All right. If I'm coming to the market, let's get rid of these. I'm gonna get rid of these because I'm gonna start fresh. Because like you guys see, we kind of it's a lot of movement going on. You feel me? So is this higher than this? Yeah. So I'm gonna look at this right here. I'm gonna look at this right here. But also I'm gonna look at down here, because this is lower than this. So I'm gonna look at that right here, and then I'm gonna see what's going on. All right. Also this too. This would be one of it too. So that if it came back to right there, I would look at that. So now this is what we want to look at. Okay. What's going on up here? So this is 9 o'clock. So boom, we move. It's 9 o'clock, and I'm seeing, because this is what you also want to look at too. If I'm looking at late night, I don't know if I take this trade. But trade why? Because late night we came down under it. Late night we came down under. And then we didn't go to the top. So it's showing me that we might want to still go to the bottom. So I'm looking at this day, and I'm like, okay, I'm not really going, I don't know if I follow the 5-minute closure on this. I'd want to see a 5-minute closure maybe above here. Oh, sorry. Maybe above this level. But I don't know if I'm going to get it off this trade. I don't think I would do it. So boom, I'm going to watch. But I'm also going to look at, remember what we got. We got a fair value gap right here. So I'm gonna see, okay, maybe we need to rebalance, or like what's going on? Like what's the word? What's the word? What's going on? All right, this one I'm looking at an hour. Okay. So in here I'm not taking nothing. I'm just going I need to wait for a big move, or maybe a tap to a fair value gap before I can get above anything. So let's see what's going on. Let's go down. All right, tap. Okay. 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 What time is this though? 10:55? Damn. Consolidation. So yeah, chat. I'm sitting on my hands. Yeah, I'm not taking nothing this day. I'm not taking nothing in this day. Remember, but look what I said, bro. So if you wanted to start like taking trades, or doing like, if you wanted to take a trade this day, remember what I told you? Bodies though. But you would have lost this trade though, because if you that's another reason why I don't trade pre-market too, right? Pre-market doesn't have a lot of volume, but you still have to see what happened. So boom, this is higher than this. So here, so like I said, we wouldn't even be in this trade because this isn't our session. So I'm looking at this, and I'm seeing that, oh, we didn't create a new high, or we didn't go all the way above here, and it corrected. We came back on the line, came back above, but it instantly dropped down. We probably don't want to go up here. So now I'm looking at the market, and and really this line right here, this indication line, I'm not really fucking with that. If I'm being real with you, I don't know. I'm not really fucking with that. This is a time where I might move my stops to the wicks. You know what I'm saying? Or I'm probably not trading this. Or I'm gonna wait for this right here. I want to see us come up above this. This is invalid to me now. I don't want to see that. This right here is invalid to me now, bro. All this level right here is invalid to me. I don't want to see none of this right here, bro. I'm not really taking no trades inside this. Maybe under here, right? So let's see what goes on. So 1400, 1600, 23, 1, 2, 3, 4, 5. All right, 6 o'clock. All right. Okay, 6, 5. Okay. So I come to the market at 6 o'clock. I'm looking, if I'm looking, bro, only thing I would see, only thing I really look at is probably under this sell line right here. Because I really don't want to take anything above here right now. So really, if I'm looking at it Friday, I probably shouldn't even been on the chart for real. Because unless we got into here, that's the only place I really want to see. So let's see what happens. The hell? Am I on the wrong day, chat? Chat, why did y'all tell me? Bro, I'm doing the wrong week, chat. I was in the wrong week, chat. What week was this? Oh, this was like last week's. I didn't even do this week. I did last week's. So that's why I was like, this don't make no sense. But anyway, just you see on Friday though. Friday we in that zone. We in that zone. I don't want none of this. I don't want none of that. I don't want none of this. Like I said, this is Sunday right here. But I don't want to take this right here. Cause look, Friday, look, we don't break above here. We just consolidate. We don't even go above here until Sunday. So like, I won't even take that. But this is, damn, chat, that's my bad, y'all. This is actually here. Let me write it right here so y'all can see. Cause I'm on the wrong days. This is actually 2 weeks. So this is like the first to the 30th to the 3rd. My bad, y'all. My bad. But yeah, that's all backtesting is. So backtesting is pretty much a place where like you see where your strategy works, see where it would work, and from this backtested strategy, what I'm gonna write in my journal when I'm gonna grab it. But what I'd write in my journal is I'd write from. So what I took from this week, you would have took. I think we took. So pretty much, this is a few things that you write in your journal. So you would write how many trades, how many A plus setups were there. That's one thing. Then you would also write, here, let's go to a place where you got some space. All right, so you write how many A plus setups were there? How many trades should you have taken? And you probably, so how many A plus trades were there? How many trades should you have taken? And then what you learned, and then how many days did you lose? And why? So like, this is the third one might be the most important thing. Because that losing day on a bar replay like that shows you why you lost. And so pretty much, because I want you to understand this, the market does the same thing over and over and over and over and over and over and over again. So once you see that play come back up again, now you know, oh, it's coming up, it's rejecting off, we not breaking lows, but it's not breaking the highs either. Why? Oh, fair value gap. Oh, let's wait for a tapping, boom, good entry money. It feels so good when you lose off a day like that, then you win off of, because you see what happens. So this is what you would mark up in your journaling, mark up in your back testing, mark up everything. And then you would go into the market the next week and do that. But like I said, but pretty much this video is 33 minutes long. It's supposed to be like a 15-minute video. But hopefully this helps. Hopefully this helps you break things down. Hopefully I explained it well to y'all. So yeah, I'm finna back test the next week and we finna, yeah, on me.